Any kind of data that illuminates a market, creates liquidity, has got to be a good thing. And actually it was CREFC that initiated the conversation around a loans database. The Bank of England have picked up with it, and I really welcome that conversation that's happening in the market. The way that both lenders and investors are open to the concept of having some transparency in that market, which will just make it safer. It reduces risk, increases liquidity, and makes for a more efficient market.
We need to be very careful not to over-regulate the sector, and actually methods of best practice and sharing that information, I think, will benefit all. I think we're all for transparency of information, but what we have to do is work out how that information can be shared. A lot of it is done informally at the moment, and that's good. The market functions in that way, but as is with all things, I'm sure there's improvements that we could all strive to make to help.
In concept, a very good idea, but like all initiatives, it really comes down to the details and the particulars. They need to capture a wide variety of data: pricing, loan to value. They also need to capture that across all lenders. Our current lending environment has many alternative lenders, funds, private equity firms. Data needs to be captured from all of those in addition to the banks to make it useful.
I think the market would benefit enormously from the greater transparency that would be brought by a loan database that provided a basic level of information about this market, not only for regulators and market participants, but for investors, for borrowers, for everybody who's interested in this market.
Greater transparency is always helpful. It helps large institutions analyse risks. It will obviously be helpful for the smaller institutions. The larger institutions, I think, feel like they have a good handle on the market anyway.
I would strongly encourage everybody in the industry, everyone in our membership, to pay attention and get involved and express their views, because I think those who do have concerns about it, it's important that their concerns are heard and taken into account so that we make sure we get it right. But I think there's enormous scope for granular data that's robust, that's standardised in terms of the information that's being provided, that allows regulators to have a more consistent understanding. And I think it's vital that the market can benefit from that better information as well. And the US market is a very good example of how better data is possible, does not disturb the efficiency of markets, indeed it enhances it.
Having a database is a good concept. I think, will a database lead to better lending? I don't think so. I think a database of that description will be no different to evaluation.
In the US, we've been collecting loan data as well for a very long time, and we have that expertise. We have the databases already structured, and it's widely used by both regulators as well as lenders to evaluate and manage both individual portfolio risk and also, from a regulator's perspective, to evaluate systemic risk.